We are here with Matt Davey, who is the CEO of Techcorp Digital Acquisition Corporation, a SPAC as they are known today. And SPACs have become somewhat trendy this year for companies in the gaming industry to go public as opposed to the conventional IPO. We have at least 4 companies: DraftKings, Golden Nugget Online, Rush Street Interactive, and most recently Genius Sports Group, that either have gone or are in the process of going public through a special acquisition corporation, special purpose acquisition corporation. And Matt's going to tell us a little bit about that process and the advantages, as well as his own company. Matt, you're a pretty well-known guy, but for those who don't know you, tell us the Matt Davey story.
Yeah, thanks, Frank. Thanks for having me on here as well. So I cut my teeth in the online gaming industry way back in the late 90s, working for an Australian government regulator, and hence the accent. And they ended up taking over a small Australian-based content studio called Next Gen Gaming in 2005. And we grew that business over a 13, 14-year period, which culminated in the sale to Scientific Games in January 2018 for about $631 million. At that time, we had 1,500 employees. And over that period, we experienced strong organic growth. We also acquired 10 companies, both in the private sector as well as in the public sector. So it gave us a good range of experience, but we really also got to see the whole market grow effectively from what I consider ground zero to where we're at today. And that gives us a very interesting insight into how we see the US markets developing as well. That's the quick background on my history.
Okay, a good background. Techcorp, I might add, is spelled Tekkorp in our contemporary way of spelling things. You mentioned the market, and obviously you see a market there. Tell us a little bit about the market from your perspective before we talk about Techcorp particularly.
Yeah, so our core focus is on the digital sports casino industry. We find that it maps fairly closely to other e-commerce type sectors. We have a market worldwide that's probably at 400 billion or so in gross gaming revenue for all of the kind of casino, lottery, bingo, poker, sports betting products, of which the digital channel is really only a fraction of that. So we're looking at around about 60 billion or so in gross gaming revenue generated through the digital channel. And we think this channel shift from land-based analog retail to digital and online is a powerful shift. We call it a secular shift. We think it'll go on for a number of decades. We think that when you consume this gaming entertainment content via a digital channel, it's as valuable, if not more valuable, than in retail formats. And we find the convenience is a huge driver behind it. So we think that we have an industry that, while the overall industry is growing at close to the CPI on a global basis, the digital channel itself is experiencing really strong secular growth. And so that's attractive. Second, it's mature in other markets and hasn't grown at the same rate, largely due to regulation. And that depends on which country we're in and which state you're in. And so we're seeing in the US in particular, for instance, the market growing dramatically over the last 24 months or so versus the European markets, which are in more of a later stage growth curve, simply because they got started 15, 20 years ago.
We see estimates in the United States of sports betting maybe being 9 billion, maybe 14 billion, maybe 20-some billion dollars a year, and online gaming being larger than sports gaming betting. Do you have any sense as to how big the addressable market is in the US?
We've seen the same estimates. It depends on which investment bank you're talking to or which consulting firm. I've seen everything from 5 billion to 30 billion over the next 5 years or so. It's difficult to say, largely because a key component here obviously is the state-by-state rollout of regulations and then the details of those regulations. So we've seen everything from very promiscuous regulations, which allow you to enjoy casino content in a whole range of different formats, both digital and land-based with an infinite number of skins versus other states that have taken a focus of just land-based only entities, one or two skins, and for instance, you might need to do physical registration, which obviously limits the overall potential growth. So you need to map that out against states. You've got some very smart people out there doing that. But the very fact you have such a large range of estimates shows how hard it is. So what we rely on as investors in the space is that demand for the product is strong. It hasn't changed. We've seen how demand moves in European markets, and that there will be built-in growth. So we know that the market tomorrow will be bigger than the market today, and we can take some bets around who we think will benefit the most from that expansion.
And you obviously believe in that expansion because you're investing in it with Tekkorp.
We do. We find, so if we're able to talk about the investment market in more general terms, you have incredibly low interest rates today, both here in the US as well as internationally. That's driven by a need for governments to stimulate their economies. And this global pandemic has certainly exacerbated that need. So that's driven rates to be incredibly low, which forces investors to move out of cash type or debt type instruments into equities. And we think that equities that have a growth built into them become highly attractive. And so we're now looking at what businesses could be valued on next year or the year after or 5 years from now, and trying to discount that back to today. So we think growth assets become very attractive. And we think that the iGaming and sports betting industry happens to represent a particularly attractive growth sector. It's got a very dependable growth rate built into it.
Now, in terms of SPACs themselves, they have become, I won't say trendy, may be the wrong word, but they've certainly been used frequently this year for gaming companies to go public. What is the advantage of the SPAC process as opposed to the conventional IPO for a company looking to go public?
So when you're in the shoes of a private owner, an owner of a private business, and you're looking at potentially going public, you've got really three options. You've got the traditional IPO route, you've got a direct listing route, and you've got the SPAC route. And there's pros and cons to all three. And we're not here to suggest that one is superior to the other, but you need to evaluate what's best for your business. And so some of the advantages of the SPAC versus the traditional IPO route, for instance, it typically takes 12 months or so on a traditional IPO route. You can achieve a public listing via merging with a SPAC in a much shorter time frame, typically 3 to 6 months, and that's a significant advantage. The benefits of just compressing the time here is you don't take market risk. So for instance, who knows what's going to happen in the world over the next 12 months? We've definitely seen some changes in the world over the previous 12 months. And two, distraction to management, which can be quite damaging to the economic prospects of the company. The second advantage is about setting price. And so the IPO process in the traditional format, you can spend 12 months working on it. Really only at the 11th hour do you get to hear from your bankers who say, hey, we've spoken to the investment community. Here's where we think the IPO should be priced at. In the SPAC route, you can have all those negotiations up front, and you can get a strong degree of comfort around pricing of your business. And that's a huge component. These people who built these companies have typically spent 10, 12, 15, 20 years building the business, and to not know what it's worth until the end of a 12-month process can be quite dangerous. So pricing certainty is also important. And then the third component that we find really attractive about the SPAC structure is you get to talk about forecast earnings. So investors in growth businesses care less about the previous 12 months or the previous 3 years. They care more about the upcoming 24 months or 36 months of the business performance. And you get to talk about how you see the business developing over that period of time in the business presentations well prior to actually transacting on the acquisition. So there's some really powerful elements to that.
Right. Yeah, I've noticed that the presentations and projections on the future can be very, very specific, very detailed.
Yes.
And very helpful, I might add.
Yes, which is really what investors want to know. It's wonderful to hear about how you grew last year, but really tell me about this year. Tell me about next year. What's going to happen to the company? That's what investors want to know. And the SPAC format allows you to do that.
Right. Okay, tell us about your company.
So we established Tekkorp Digital Acquisition Corporation on the back of really being in the market for the last 2 years or so, looking to deploy capital in fast-growing gaming businesses. And one of the things became clear, there was certainly a large pool of capital looking to be deployed, but there was a standard tension between private companies and private equity and other sources of investment. So we looked at the SPAC model a while ago, and it wasn't as appealing as it is today. So we've seen the status of SPACs improve both through the quality of the sponsors and the investment banks involved, and we think the management teams that have come together have certainly improved in quality. So we've been very thoughtful about how we structured this. We put together a very experienced management team. We were keen to focus on a real operational experience. I think it's important to note, within a merger with a SPAC, it's not just a transaction that's consummated over 3 months and everyone walks away. This is a business where you'll be joined at the hip with the management team and the sponsor for a large number of years. And certainly we're focused on transactions that bring something meaningful to the industry and have a long-term focus on growing those businesses. So we wanted a management team that had that deep operational experience where we can really add some value. And we wanted a board that can also help navigate through these kind of high value transactions. And so we've got a very experienced board of people with great reputations in the industry, covering both finance, transactions, regulations, etc. So that's what we thought, and we felt that the market timing was particularly useful. What we have here in the US is a couple of key things here. There's a couple of key dynamics that are worth touching on. The first is that the US market probably represents one of the fastest growing iGaming and sports betting market segments in the world. The second key piece is that it has the potential to grow to be the largest single market segment in the world for iGaming and sports betting. So if you're a global operator or supplier in the iGaming and sports betting space, you probably need to have a presence here in the US, and you probably need to compete heavily to establish market leadership. That's expensive. And so we think some of the more efficient sources of capital, the US public markets, they have the deepest pockets and the most liquid markets. And so we think that there are some really key drivers here as to why private companies with global ambitions would want to be in the US and therefore need to access the US public capital markets. And so we set this SPAC up. We think it's the right structure for certain types of businesses. And we think we've spent a long time thinking about how do we add the most value as a partnership to help bring those companies from the private market into the public market.
And what kind of companies, what size companies and so on are you targeting?
Yeah, I think there's a general misconception about SPACs in terms of the capital they raise versus the target size. A lot of people think you've raised 100 million, 200 million, 300 million, and that dictates the size of business you're looking at. You're looking for a $300 million company. The way to think about SPACs is you need to look at 3 to 4 times the cash raised in the SPAC as typically the pro forma enterprise value of the target. And so in this case, we've said in our filings, we're looking for businesses of between 1 to 2 billion in enterprise value. That's probably at the lower end of what we're looking at, and there's certainly no limit in terms of the upper end. And the way we structure that is you have both the cash in trust, which is part of the SPAC, but you also bring on board a private investment in public equities, a PIPE, which brings in additional capital. And then we can look at layering on other forms of capital, such as debt, mezzanine-led, convertible notes, et cetera, which our management team has a lot of experience in structuring. So that gives you a sense for the size of the assets we're looking at, and certainly isn't a function of the cash that we raised that's in trust at the moment.
Do you have any sort of time frame?
Look, we've got 2 years to consummate a merger, but you've got a very keen and focused management team here. So we're working hard every single day now on looking at the right kind of deal. So we're hoping to bring something to market sooner than later, but obviously we're working within that 2-year time frame.
And I gather from your earlier comments that you have companies who are interested in exploring this possibility.
Yes, we've had a number of inbound inquiries. I think the management and board are well known in the industry, as you touched on at the opening, and we certainly have great relationships that we enjoy around the world. So there's been certainly a lot of interest, and I think as we talked about the market dynamics, this demand from public investors to invest in growth assets. It's creating a very fertile ground for these type of discussions.
Okay, great. We've covered a lot of territory. Anything else you'd like to folks to know?
No, I guess in kind of summarizing, I think the whole transition going from private to public, it's a very maturing process, and it certainly brings on board a number of elements that a company can actually really benefit from. So you structure corporate governance that's quite different in a public market. You structure financial reporting, and you really have to force management to think about long-term deployment of their own capital and how they intend to grow the business. I think that's a very healthy aspect for some companies. I think the second component, so that's the private benefit going public. The second component is for the public investors. I think we'll see a large number of new products come to market, new companies come to market. I think that's great for public investors. They get to choose, do they believe in the growth of online sports betting? Do they have a preference for iGaming? Would they prefer to be invested in a underlying supplier? Do they like the data analytics side? So I think the range of products you'll be able to express your views on will increase, and I think that's great for everybody.
Okay, well, Davey, it's very informative. Thank you. Matt, I'm sorry.
Yes.
TEKKU is the ticker symbol?
Yeah, so that's, people often go, why did you choose that symbol? Well, the way SPACs work is when you buy a unit today, a unit gives you access to one share and half a warrant, and that's captured within the unit. So TEKKU is the unit. At some point, we split those out, and so they trade separately, and then you'll have the share, which will be TEKK, and then you'll have the warrant, which will be TEKKW. But that splits out over time. It's just part of the structure of the SPACs.
Okay, great. And if someone wants to learn more about Techcorp, how do they do that?
You can go to our website, techkorpdigital.com, and we'll have all of our SEC filings and information about management, the board, and contact information.
Okay, Matt, again, very informative. Thank you.
Thanks for having me on, Frank. Great to see you again.
You too.